Here's what the setup looks like. You do have the S&P 500, which has seen its longest losing streak since the month of January, and the fact that in the month of April so far, you have most of the major indices that have been lower, and that's pretty much been in stark contrast to the stronger than expected market performance that we witnessed in the first quarter. What really is leading to this? The fact that there is continuing to remain concerns, geopolitical, Iran-Israel war. That too is keeping crude oil prices quite volatile. The rate cut expectations continue to look dim basis the kind of commentary that is coming in from the US Fed chair. And you've got the bond yields that have spiked briefly to 5%, but now settling at about 4.59% post the kind of commentary coming in from the US Fed chair. And that, Nikunj, is keeping the overall different asset classes like gold lower, dollar index below 106, and Wall Street's volatile.
Okay, so let's look at what happened while markets were shut. There are and there were and there will be three concerns, at least in the near term, from a global standpoint. Geopolitics. Thankfully for us, we've not had anything negative or scary or a new development. We've not heard anything from US, Europe, or any of the global leaders on the situation in Israel and in what potentially could happen on geopolitics in Middle East. That is the reason why crude's down. That is the reason why you've not seen an ugly spike in volatility. That is the reason why you've not seen anything scary, at least in the commodity market. So that's point one. Second is US macro. While what Avan said, US macro, well, things have changed. Beginning of the year, markets were pricing in 4 to 5 rate cuts. Now markets are talking about maybe 2, maximum 3 rate cuts. That changes the landscape, and that is having impact on the market, global setup, and also how FIs are selling. The third problem, I think, is FI selling, which is the real deal, which is that FIs, they continue to sell. Let's look at the data, please. FI month to date, last 3 days, 1500 crore of net sell. Month to date, 18,000 crore of net sell. Hello. India was supposed to be the only story which was giving growth, but our global friends are saying no, we like India, but valuations are expensive, or tactically the run-up has been strong. Maybe you want to come after elections. So I don't know what's the real underlying factor, but global macro and FI selling, those are two concerns which will, in a sense, bog us down. So that's the setup for you on geopolitics, relief. On US macro, there is definitely a change in stance. And then when it comes to flows and momentum, FIs versus DIs, FI selling is ensuring that the cap for the market, at least for benchmark indices Nifty, I think it seems to be coming in. So there is a definite roof for the market, courtesy what's happening at macro and courtesy what is happening with FI selling.
Okay, so the roof for the market has been made on account of that FII selling, but the point is, where do we find that floor as well? Because over the last couple of trading sessions, there has been quite a bit of selling. In fact, in the last 3 sessions, Nifty has been on a losing streak. It's lost almost 600 to 700 points, way off that 23,000 mark that we were all watching out for. It's ICICI Bank that was dragging its feet on Tuesday, and that's the reason Nifty Bank was quite lower. HDFC Bank, on the other hand, was batting for the bull, so there was some semblance as far as of a bit of a support coming in from HDFC Bank, but ICICI Bank and other banking names were clearly the pressure points. Small cap index actually managed to outperform a bit because it snapped the 2-day losing streak and ended with a slight bit of gain. FMCG, which was otherwise a bit of an underperformer, also managed to be one of the sectoral gainers. But other than that, IT clearly was the pain point for the markets on Tuesday, whether it was Infosys ahead of its earnings, which was down almost 4%, LTI Mindtree on account of those slew of exits, they were putting pressure on the market. So clearly, Nikunj, as you pointed out, yes, the roof has been made, and the point is now the heavyweights are not participating. Yes, HDFC Bank is doing its bit maybe, but ICICI Bank, IT, they haven't come back yet.
See, FIs are selling, and you must respect that, and you must recognize that. If they are selling, they are largely going to sell banks, financials, large cap stocks. So it just comes back to that whole point that are they selling because there is something so far alarming which has happened on the earnings front? The answer to that is no. Has the narrative changed? The answer to that is no. It is just that there seems to be an adjustment at global level for risk and for US Fed, and which way flows are likely to move. So you may call it slightly unfortunate, but that is true. that because FIs are selling, minus let's say minus Reliance and an ITC, you don't have a leadership stock. And typically when FIs they sell, banks they tend to underperform, and that is where I guess the pressure point is. I don't think as of now there is anything which could be called as a near-term scare, but the market in a sense are getting completely boxed. So if you're planning to trade, the strategy for the day is that you want to be a buyer, but you want to be a buyer closer to support level. That's where the panic will get created, and that's where we are reaching. So I think in the near term you will get a relief rally, you will get a little bit of scare, and hopefully towards the second half of the trade you will see markets giving you a mini intraday bounce, so to speak. That I expect to happen. You'll have to wait for Infosys numbers before you make a conclusive view that okay, worst is behind IT, which way is IT moving. You put in a combination of TCS and Infosys, you pretty much would know which way things would move, because TCS numbers were not that bad. Infosys last quarter, as in when I'm talking about Q3, was not that bad. If they are able to talk about anything closer to 8 to 9%, they hint at double digit, markets will like it. Metals is where the real action is, both locally and globally. We all know the factors. But in terms of the dominant theme, I think summer and elections are the two dominant themes. You've got to be buyer in those themes at lower levels. You want to be buying metals at lower levels. But to make a case that you want to make quick money and there is a pocket of very strong momentum anywhere in the small and the mid cap space, that I think is the missing link. The difference I see is this is more like a market where headline indices are getting jammed and small and mid cap stocks are not getting that jammed. It's very different from March. March headline indices did well and small and mid cap stocks they did not get jammed. It's the other way around right now, and that could clearly be correlated and related with FII selling. So it's very simple. I mean, markets are not complicated. Geopolitics, nothing's come. Crude is down. Macro, it's changing. Yields are up. FIs are selling, and large cap stocks are losing their so-called leadership because the flows are moving against us.
Okay, so absolutely not difficult to assess the current situation, but let's also assess the earnings picture. Today, you've got a lot of heavyweights that will be coming out with their numbers: Infosys, HDFC Life, and Bajaj Auto. And then tomorrow there's Wipro's turn. And you were talking about the IT sector as a whole. This time around, the weak discretionary demand could weigh down when it comes to Infi. And when it comes to Bajaj Auto, maybe the lower input costs could add some operating leverage. What are the important factors you track, Nikunj, when it comes to numbers?
For me, more than Wipro and Infosys, it would be HDFC Life and Bajaj Auto. I'll tell you why, because I was just looking at numbers which have come for the insurance sector per se and how the non-life insurance part is moving and the kind of numbers which we've got the quarterly updates from some of the insurance companies. HDFC Life is like a market leader minus HDFC Life. So from a market standpoint, that in a sense would be an important number to reckon with. Is the insurance sector at a turn? If that is at a turn, then in the second half of this year, financials because of FII selling, at least banks because of FII selling, they are not outperforming. But insurance is where the turn is there. And if the sector after 2, 3, 4, 5 quarters of very mediocre growth, if it starts turning, then we've seen money could easily rotate back at a local level also. So HDFC Life numbers are important. Bajaj Auto, like it or don't like it, it's been an outperforming stock. The whole connection that, okay, rural India not doing well, India will, two-wheelers will not do well, that has got dismissed. So somewhere you want to see Bajaj Auto numbers as well. Wipro, frankly, nobody is expecting anything. Whatever assessments and whatever judgment and whatever readjustment had to happen on Wipro, I think has happened after the CEO departure. And then Infosys, fingers crossed, bhai kuch kharab mat karna, because we've seen Infosys numbers have been highly volatile. But if TCS and Infosys, TCS you heard, if Infosys says that worst is behind and they could be aiming at a double-digit growth somewhere in FY26, that may just give a spring in the stride for the bulls. That's about it.
If you like this video, then like, share and subscribe to ET Now.